right, welcome everybody. So this is a great show today. We're going to be going through a lot of graphs and tables to show that the exponential growth of electric vehicles and that Tesla's market share is hitting a tipping point. This is going to be the point where now we're going to see things just skyrocket from here. So we've got Randy Kirk joining us. Thank you, Randy. I really appreciate you here as always. And you're still in Hawaii, but hopefully you're going to get out of your relax zone and get into the excited zone. Right, here we go.
Well, I know I'm so just laying back and just all relaxed, but I'm still totally excited. Did you see what happened with the stock?
Oh yeah, maybe you should
I mean,
stay
I
in
hit that
Hawaii.
out of the park. Did you see what I did last week? I mean, I couldn't have I'll never do that again. But,
Yeah.
for that one time, folks, I got it right. Look at that.
Well, this is your topic. One of the main topics we'll cover today is that you do believe that we are heading to a bull market, right? So let's
Yes.
talk about that right now. Let's go ahead and share your thoughts. So you basically have been saying now that you about 2 months ago, and many people were very, very negative about what happened right off the bat from that Investors Day and the earnings call. And then things have started turning around after the earnings call. Things have started turning around. But in general, you were thinking that we're going to head into a bull market, right? So tell me what you're seeing.
Well, so I got some things right and some things wrong about that. See, which proves that my hitting the numbers exactly last week was a fluke. But what I got right was we've seen a narrative shift for Tesla. So the narrative was a little negative because of, you know, the Twitter overhang and because of missing the numbers in the fourth quarter and the first quarter. And, there was a bunch of these negatives that were hanging on to Tesla and were beating it down. And we were in a risk off market. Both of those were contributing to a situation where it was really hard for Tesla to get out of its trading range. But it was eking up, nowhere close, of course, to its bottom. But then the narrative switched, and the narrative switched over the course of about a week, where all the negatives went away, and all of a sudden there was a bunch of positives. And the positives were things like, the pricing discount, the discounting stopped, prices started going up. We had the Twitter thing solved. We had evidence of the energy division. People starting to talk more about the energy division and what that was going to actually contribute. Anyway, there was a list. We did a whole list on your show of all the things that were contributing to a positive narrative. Oh, margins, of course, potentially going up, and all of that was showing real high potential with no risk. Well, how many times do you get a stock where you have massive potential and no risk? So unusual situation. So I called it and I said, look, I think that Tesla is going to continuously beat the market. It will not
Mhm.
only beat the NASDAQ, but it will also beat what I call the risky, small growth stocks. And because that's how Tesla had been treated for a year, was as a risky growth stock, similar to all the other Kathy Wood stocks. They were all beaten down, some of them over 80%, even though they were good companies. So Tesla was being treated like that. And I said, okay, I think it's going to decouple from that now. It's going to be its own stock. It's going to be unique again. And you'll start to see it moving up even compared to those. Well, those have been up nicely. The NASDAQ has been decoupled from the Dow now for for the whole first part of the year. And so Tesla has been decoupled from all of it and is now outstripping everybody. So anyway, last week I just said, look, I think it's going to finally break through 200. That's one of those weird levels that, it's just an even number thing where it bounces up against 200. I said, I think we'll break above 200. And if we break above 200, we're going to 217. Well, I thought it was going to take 2 weeks, but it
Yeah.
took like 2 days. And then it bounced against 200, and today again it got above 200, but it came back down and only closed at a little over 217. So I think we're still a little restricted in that area. But if we break 217, and I'm not a technical guy, but I do believe in the fact, okay, technicals happen at least because 20% of the people out there investing believe in technicals. So it's a
Mhm.
self fulfilling prophecy. So you have to pay a little attention to technical analysis because so many people are. So, anyway, 217 is now definitely where there's resistance, top and bottom. Um, Now, if we break 217, I think we go up into the 240s, 250s. I forget, there's a fairly significant resistance somewhere around 263, I think. But all of that is just really temporary nonsense. We're going to 300. I've been saying
Yeah.
that for 6 months. We're going to
Yeah, I
300.
know you have, and I think we're believing that, but it's most people believe it's tied to macro. But I think everybody's now seeing, looking forward in the next 6 months and so forth, that macro is now turning. Correct? I mean, people are saying that inflation's being tamed. In fact, the job numbers came back, and it's actually good that there's some softening in the jobs. That's like one of the metrics. It's kind of the odd thing, right? The opposite of what you think. But
Well,
the Fed's been looking for that. Yeah.
So Kathy Wood called it. I think Kathy Wood totally called it last week.
Hmm.
I had not realized the bull market started in January.
Hmm.
I don't think anybody, I really am searching for any other person who said this before Kathy. The bull market started in January. I certainly didn't think of it that way. And so I was like, what? Oh my gosh, it's true. We've been in a bull all this time, but the risk on has still been there. I'm sorry, risk off has still been there. Now the risk is coming to a
Yeah.
little bit. People are willing to take a little bit more risk. And so, yes, I think the macro is going to continuously improve, but Tesla will be going above that macro on its way to 300, maybe after the second earnings call. Second quarter earnings call
Uh,
might be the impetus it needs
yeah.
to get up to 300. And then we'll break through 300 on the way to 400. Yep.
Yeah, well, a lot of us are gun shy, so I'm not about to call anything like that. But I mean, the reality is things are turning around. So number one, what they said in January was that in the Nasdaq one, it was was positive in January, and like 90% of the time when January is positive, that means that the rest of the year will be positive, and it's a growth year. I mean, how do you take that statistic and take it forward? But the point is that we've been hammered for a year and a half. But if the macro changes, all bets are off for Tesla because it's been held down for so long with so many good news that you and I have been reporting on a daily basis for the last year and a half while the stock was hammered. It's about to come back. And then what we're talking about today is not only that we think that Tesla is going to go back in a bull run, but actually the electric vehicle adoption, all the metrics we're going to show today. I've got lots of tables and charts to show. It's showing very much that we're at the inflection curve and we're about to skyrocket up. So
And
let's go and cover some of them. Mm,
and Herbert, just one last thing. This is one thing I'd really encourage your audience to pay attention to. Monday afternoon, there should be a video about Trueflation, trueflation.com,
mhm.
which is a instant day-to-day inflation index. So it's not a month behind. It's not 2 months behind like the regular CPI. It is a day-by-day inflation generator, and it usually is about 2 months ahead of the CPI. And right now, it's showing under 3% inflation.
Yeah.
And so, if it's true, if this Trueflation is predicting that we're under 3% inflation right now, all bets are off in terms of the economy. We could be going for a major bull.
Yeah. Let's hope that's right. Cross fingers. Okay, let's report on some things first here. This one I don't find as exciting, but Morgan Stanley, Adam Jonas released this note today and he shared some more information. But, it's interesting what they are saying, right? So they reported on the thing we've already been talking about, which is that over the weekend, Tesla reported that they're now able to accept $7,500 in the entire IRA tax credit for the Model 3s instead of what they used to say, which is half of that. So that's good news for Tesla. But there's a couple points in his note that was interesting. One is that they talked about the loophole on leasing. So the IRA has language there that says that if you are leasing for lease cars, it's very weak language that allows companies to still take advantage of the IRA if that's the case. And all they're saying here is that we would watch closely in coming weeks and months for further lawmaker comments on this issue because they just can't imagine that the government's going to let this through. Just weak language on the IRA that it's a loophole. But then this is the interesting note that they said. We'd also watch out for signs that Tesla would build a large, full scale captive financing subsidiary as the market matures to facilitate the potential IRA leasing rules, which could become a major driver. So, this conversation about whether or not Tesla should get into Tesla financing, Alexandra Mertz of Tesla Boomer Mama, she actually did a whole presentation on financing, basically saying that, this is a perfect time for Tesla to get into financing because you can, if you spread out the loan terms to 10 years, because these cars last for a long time, you can actually track and retrieve the cars if they ever need to be retrieved again. you can bring down the monthly fees of this financing to something that's just so attractive, hundreds and hundreds of dollars lower because of the interest rate imbalance between that. And then Elon
Well,
answered that
in the
saying that he
well,
he doesn't think that they're going to be able to do this because it's really up to the banks to decide if they want to do this, and most banks won't do this. But what's your position?
yeah. So back in the Elon Musk mission, if you haven't bought your copy, how come? Anyway,
Oh yeah. Uh-huh.
so back in the Elon Musk mission, I did suggest that as a marketing lever is to extend leases and or
Yeah.
I think I was talking about purchases, but longer term loans because the cars are holding their value and so they should be able to make longer term loans and then longer term leases. And I did a video
Yeah.
2 months ago, 3 months ago, maybe back in January, recommending longer term leases and that leases would be a great place for Tesla to make money. The flip side of that, and the only big negative, which I didn't realize until I think Elon was talking about it, if Tesla does it themselves, it
Hmm.
is a massive amount of money.
Hmm.
You're talking about not the 10, 20 billion they got sitting around right now in their checking account. You're
Hmm.
talking about a lot of money to get into that side of the business because you're basically having to 80% of what you're selling, you're potentially going to be handling the money, handling the loans and the leases. So to do all of it is crazy. My recommendation has actually always been more like, no, you and I could be completely nuts on this. You go and you sit down with the bankers, just like you're sitting down with the heads of states. You sit down with Citibank and you sit down with
All right.
Bank of America, and you make
Like a
deals.
deal.
And you say,
Yeah.
okay, we're going to be the biggest car company in the world. You need this business, and how
Yeah.
can we work together to manage some opportunities for both of us?
Yep, that's a good idea. We'll see. I like that. That probably will happen. Okay. The next thing is in a note that Adam Jonas did, Morgan Stanley. They said that, China, they had a good comment about it. We have yet to see another OEM that can truly rival Tesla with an electric vehicle that offers current attractive unit economics. The Tesla, then they can say that Tesla, established in the West, has made the company seemingly invulnerable to competition up to this point. So they're saying that Tesla is really does not have any competition in the West. But they said that Chinese OEMs are probably the one that has the greatest shot at disrupting uh, Tesla's dominance, and that they're getting Chinese OEMs are getting market share in China because of the incentives, increased capacity from all these players, and so in China, Tesla's been losing share in China, um, but they're still, as we say, the number one greatest profit, the greatest sales. But they're just saying that listen, it's going to be Tesla. It's going to be Tesla and Chinese companies, which again we knew. It's just interesting to have them say that as well.
Well, okay, so what's really crazy to me with these Adam Jonas and all the rest, and some of these guys are really good and some of them are not so good. I don't understand why they've never read my book. Why they
Sure.
haven't read the Elon Musk mission? Because in there we set out over 20 big moats.
Right.
So it's not just
Yeah.
price and it's not just the quality of the car, the safety of the car. It's not just their manufacturing capability. I mean, none of these things are just. There's like 22 different things that separate Tesla from the rest of the crowd. And the things that separate them are substantial. These are not little moats, these are massive moats. Farley got it. Farley says, look, if we're going to compete at all, we've got to have a charging system that people are going to appreciate. Otherwise, they're not going to buy our cars. So he makes a partnership. Well, lots of people are probably going to have to make those partnerships because the moats are deep and wide and filled with alligators. So, and it's like, how come the pundit class and
Hmm.
these investor guys that are watching other people's money, how come they haven't gone to the trouble to analyze these moats that are you can't just get over them in a week or a month. Finally, Mary Barra even gets it. Well, if Mary Barra even gets it, I think that we're on the way to maybe the rest of the investing class
Yeah.
starting to go, oh my gosh, this lead is insurmountable.
Well, that's the point that we're talking about today. We're going to show a lot of graphs, and we're going to show how we're at the inflection point. This is an S curve. This is an exponential curve, and so things look like it's slow. Then it's going to start accelerating, and as it accelerates, it'll separate out the competitors, and we'll see Tesla showing its strength in its pricing power, its margin power, its software power, its ability to, just the brand that they're doing, and people will start to compare EVs against each other, and they'll see the benefits. So these moats, it appears, it's just that right now we're still at the early stages. So that's my opinion. That's what I think might happen. So yeah, I love your book. You have so many great moats in there. Obviously, several of them are the ones that really matter, and but it doesn't matter. There's so many of them that there's
Well,
just too many. And it,
so
yeah,
so it is funny, Herbert. I mean, one of the ones that people have actually talked about, a lot of the competition has talked about, is just over-the-air updates.
I know.
I don't even think I
Well
had
said.
that one separately. I don't think that was separately in the book. I think that was included as one of the
Yeah,
software deals, but nobody has even been able to come up with
yeah,
an over-the-air update that works. I mean,
yeah.
how
They're
crazy
not
is
software
that?
companies. Yeah. All right, let's take a look at some tables and graphs. So these are some of the best tables that I found just to set the stage of where we're at here in Q1 2023. You can see that the red line is Tesla's uh, electric vehicles share of the versus all global electric vehicle sales. And so you can see that Tesla is at 20% in Q1 2023. And what's funny about this table, you can see this line, this dotted line that kind of looks like it's going down. So you look at, oh my gosh, it's going down. But if you stop and think about it, Q1 2019 is 19%, and Q1 2023 is at 20%. So why is it that they think it's going down? It's basically a flat. It's more of a flat. So I don't know why they put it falling down, but even if they did, it's a tiny little drop. And that's because of an artificial rise because of the COVID and supply chain issues where they were able to sell more and higher margins so far. So that is the current situation. 20% of against global electric vehicle light sales. But what we're going to talk about, and you pointed out, you really should not be looking at the percentage against EV sales. You should be looking at the percentage against all car sales in total, and we'll look at that.
Yeah, so I mean that's the key. However, if in the back of my mind, I do believe that Tesla should maintain 20 to 25% of this category. So as we go forward, if they dropped well below of the worldwide sales, now
Mhm.
don't go territory by territory. That makes no sense. You have to go by worldwide sales. I think Tesla would do well to stay within the 20 to 25% of worldwide sales of
Sure.
BEV cars. Yep.
But I think we need to point out that if you're comparing EVs against all EVs, you're not comparing the segments. And so
Right.
right now, Teslas are at 40,000 and higher. And of course, the price cuts have brought it down. But for the longest time, we were at the premium price points.
Right.
And even though it's priced at $55,000 US dollars, it's still the number one selling vehicle in China. And the Model Y is still the number one selling vehicle around the world, despite it being at a premium price point. Now, what happens in a couple of years when you've got the compact car, you got the reduced prices Model 3, now you're starting to play in the same price points that when you say 20% and there's another 80% of other EV selling, that's because they're all the smaller low end cars. We just have to remember that, which we don't play in. That as soon as Tesla plays in that, it's going to go up. So this is the lowest percentage, not the opposite. It's not, and we're going to start losing competitors. Not like there's going to be more. More will come, but they're not the ones that we think are here. Right? We're seeing them die. So okay, so let's take a look at the other tables here. This is Victor wrote this down, which is what we just said. Tesla continues to capture percentage share in the global car industry, and that's what counts, not the percentage share of BEV. So, in the global car share, this is Tesla's growth. 2019, it was just 0.3% of all sales that Tesla made. 3.3% of all cars that are being sold each year. But now we're at
Yeah.
2%. Now we're
Yeah.
at
Yeah.
2%. So that's
Yep.
a, I mean,
And
percentage
this
terms,
yeah,
massive jump, seven
and this
times.
will and this will
Mhm.
continue upwards to until it gets to about 25%, and that'll be at about the same time as 100% of all cars sold are BEVs.
So
Well,
you're
no,
saying
because
1 in 4 cars sold, which is 20 million out of 80 million
yes,
per year.
yes, yes. And
It's
we
going to
have
be
and we and one of the fun things that people again, most people are not statistically oriented. They hate math and they hate statistics, but you can look around the world and you can see the future. You can look at the Netherlands. I think it's the Netherlands. I'm always getting them confused. I think it's the Netherlands that's now in May was 97% plug-in
Hmm.
vehicles.
Yeah.
Their sales were 97%. Then you can go down the road to China and you've got over 30%. Well, I think we have a chart on that later. And then you can go over to Europe and it's over 20% now. You go to California, it's 17%. You can go to worldwide, it's 10. You can see the future is this exponential curve. You can see examples of it already happening in certain regions. And it's just going to follow like that around the world as this next 5 years plays out, 5 to 7 years.
Yeah. Now here, this chart is amazing. And so what it is that this, if you take a look at all EV sales against compared to all car sales in general, we're
Mhm.
now at 10%. So 10% of all cars being sold is an electric vehicle. And that's a big deal. That's a big deal because there's this, it's an exponential growth. As you can see here, you can see this line growing up. And once you hit a certain number, sometimes it's 5%, sometimes 10%, sometimes 15%, in any industry that is exponential growth, then that's the curve when it shoots up. We're almost there. We're pretty well
Yeah.
there at this point. And that
This is
number is
this is
important. Mhm.
This is Tony Seba's theory. So Tony Seba's the one that has studied disruption. He's looked at disruptions going all the way back to the turn of the previous century, and he sees this over and over again. And I think the 10% number probably is the applicable number here, but it doesn't really matter whether it's 10% or 15. It's going to happen. I mean, pretty much you have everybody but Toyota believing that now.
Yep. And this is a good reminder. This is Martin Viecha, who's the investor relations person at Tesla, saying global EV market share surpassing 10% is a big deal compared to predictions from years ago. That's right. You got to remind ourselves, what was everybody predicting? You know, they all kept saying it's not going to get to 10% by 2023, right? Isn't this the best scenario to be in when the market is still at 10%? So you got this huge opportunity to grow still 9 times growth of where you're at today. And yet it's a stable number. It's like it's no longer this little tiny number of who knows. Maybe it's a fad. Maybe it's just an interesting, blip. Only the early adopters are interested. No, at 10%, it's a clear sign at this point. It's a done deal. 100% of all cars will be electric vehicles at some point. We got 90% to grow. I'm holding on a stock of a company that is going to go 10x of the 2% market share of where we're at today. So, and if not even higher, right? This is just like, if it's very likely we are the leaders and all that. So, you know what I mean? It's like the best scenario, the best time to be right
and maybe
now.
and maybe like Apple, maybe they'll still be over 100% of the profits by the time we get there.
Oh, okay. So that's really cool. This guy is a Tesla Q, so it has a different opinion. And his opinion was Tesla slowly but surely losing its grip on the market it created, declining market share in the pure BEV market, never mind the broader EV market, where BYD and other new entrants are eating its lunch. Broader meaning it's not just the battery electric vehicles, but also hybrids and fuel cell. And so that's they're thinking, oh my gosh, Tesla's losing its share. And you replied saying, I hope even the math challenge understand that this analysis is useless. Overall market share in a new product category where one brand dominates will obviously drop as a percentage as any competition enters the business. As soon as everybody enters a great market, they're going to all come in. Your market share is going to go down. What matters is percentage of total EV sales. And the reason why this is such a great tweet, Randy, is because
Well,
Elon liked it.
the boss, the boss liked it. It's always good when the boss likes your effort.
Yeah. All right. Great tweet. Yeah. I mean, it's just pretty
Okay,
straightforward. So
so I
yeah,
think I
yeah.
I think that I think Stephen Mark Ryan explains this the best. He says if you've got a new product in a new market, and you have 100% market share, and you're selling a million of them, and nobody's selling any at all except for you, and you're selling a million, and somebody comes in and sells one, you have lost market share.
Hmm. Yeah. There you go.
So it's just numbers, it's just math. But there
Hmm.
are people out there like this tweeter who apparently are math challenged and don't get how to analyze such things.
Okay. So let's take a look at some other incredible graphs and tables just to remind folks where we're sitting. So this is Clean Technica reporting on the Q1 2023, which just ended, right? So this is what we're seeing here, that this is all the in the US electric vehicle sales. And you can see here that Tesla Model Y is in the top row here, selling what is it? 90 99,700 in a quarter. And then you've got the next is Model 3 at 52,000 sales of the Model 3. And then the third is Chevy Bolt at 20,000, 19,700. And they just discontinued the Chevy Bolt. And that's the only one that really was almost at 20,000, compared to 99,000, one fifth of that. And then the next contender is the Volkswagen ID4 at 10,000, 9,700. So when they say competition is coming in the US, where Chinese manufacturers are not here at this point, the next one is at 9,700 ID4, which is 10% of the Model Y. And if you add up Model Y and Model 3, which is Tesla's total, they're nowhere even near at 10%, right? Then you can
Hmm.
see how all the other competitors, the Rivian, the Hyundai Ioniq 5, which is even while it's a great car, it's just still not selling in numbers. They only sold 5,000 of them. I better say 5,700 because the 700 matters for them. Then the Ford Mustang Mach-E, which we've seen so many commercials about how great, but they've only sold 5,000 for what is it, 5,400 of them. You know what I mean? So yeah, it's like tiny little numbers, even though there's so many competitors, and then you add them all up, they add up, and that's how you lose market share. But individually, they're tiny. Yeah.
Yeah. Yeah, it's certainly no evidence that anybody's eating Tesla's lunch, and it's certainly no evidence that Tesla is losing comparatively to competitors. As long as Tesla sells every car they can manufacture at a profit, especially at the profit levels that they're at, but at a profit, then
Yeah.
there's nothing to take away from them. You can't do better than selling every single product that you make. If you have capacity limits, you set your goals, you set your capacities, and then if you can sell out and it's profitable,
Mhm.
what else is there to say?
All right, let's take a look at another graph here. So this is another one. I think it's an older graph, but it shows the 8 brands in these countries. I think it's 12 countries here in Europe. These are all European countries. And just looking at these 8 brands, Tesla is the purple down at the bottom here. You can see the purple share in Europe. It's at 20% in 2017, and it's at 20% in 2023. But if you look at what's happened to the competitors, that's what's interesting. You got Nissan, you have Kia, you have Audi, BMW's in the green, Hyundai in the green, the light green, and Renault and Volkswagen. Take a look at it here in 2017. These European companies, and the Hyundais and the Kias and the Nissans, they were doing very well in Europe. But now look at their shares; they've all been decimated. They're all tiny little, percentages, except for maybe Volkswagen, and everybody else becomes small. And the empty space is owned by other brands that are not represented here. And it's not yet the Chinese brands. The Chinese are just about to enter into Europe, but clearly, even the Europeans are not taking a liking to their own brands. What's your
Yeah, well,
interpretation of
no,
this?
there's no question. I always hate to argue with you, Herbert, but the Chinese are there already,
Hmm.
and some of the Chinese, in particular, BYD is already in Europe, and some of the others are already in Europe, and a lot of the big concern in Europe right now is that the Chinese are making really good products, and even after they pay import duties and transportation, they're still very competitive. So, as Elon says, they're making compelling products at compelling prices, and the European makers are not competing, and they're certainly not competing with Tesla. And now that Tesla has a manufacturing facility in their backyard, the numbers are just going up radically in terms of Tesla Model Y sales in Europe, especially in these countries that have high percentage of BEVs, like the Netherlands, like Spain, even some of these countries they're on the S curve already. And those places where the S curve is most pronounced is where Tesla is really taking over.
Yeah, no, I think I agree with you. I know that the Chinese manufacturers are in Europe, and I know that they're being favored by the Europeans. And so it's actually a double whammy for the European brands and the American brands, by the way. Both European and American brands in Europe is being decimated, and nobody's buying them in China. And so
Yeah,
they're it's the Chinese and the Tesla that's doing well, but I didn't know the percentage share of sales. I just thought that BYD was just dipping their toes into Europe at
they're
this
just
point and
bringing in
getting,
some of their new ones. They're bringing in new models. So they've
yeah.
had some models there for a while. Now they're bringing in new models, but some of the other companies have had product in there for a while. Yeah,
Okay, I didn't know. I'm gonna look. I'm gonna try to find out how many, what percent, because this
yeah, very
table
good.
only showed the 8 brands, not the Chinese brands
Right.
in Europe. So I'd be curious to see what their shares are. So this tweet from this guy named Science is Strategic. What the interesting thing I just saw was down here when he said Chinese EV sales went from 3.5% of new car sales to 26% in just 2 years. That's the interesting table. And then I found this table, which is showing that. So in 2020, Q1, electric vehicle sales in China was just 3.5%, which is, sounds similar to where we are at right now, 2%. Well, I mean, no,
Yeah.
I'm sorry, we're at 10%. We're at 10%.
No,
Tesla sales at
worldwide,
3.5
worldwide is
worldwide.
10%.
Yeah.
Yeah.
And then here it shot up in China to 26% in just a couple of years because of incentives, because of what they're pushing hard. I think they have incentives for EVs, and they also have coming uh, penalties for ICE vehicles. So they're really pushing hard. But look at that jump! Boom! Yeah.
Yeah, and that's only showing through quarter 1 of 2022, and in 2023 we are already past 35. I think it's past 35% now in China.
Mhm. Yep, it's now past 35% in China, and this includes not only battery but also plug-in hybrids.
Yes.
So that the percentages include that. So, but it's just another indicator, right? If this can happen, like you're saying, you've been saying that Norway, China, these other countries in Europe, the Netherlands, they're the canary, right? They come out and whatever you see happen there because of incentives. Now we just added our incentives in the US. We're going to see the same thing in the US. That's what's going to happen.
Yep.
Yeah. So now let's talk S curve. So this is the thing that people don't understand, right? The EV adoption is an S curve. And if you want to believe that that's an S curve, take a look at this.
Yeah.
This is the beginning of the S, right? It goes up like that. And then what's going to happen is it's going to be a very sharp, like skyrocketing straight up line at this point. That's what we're saying once you hit a certain number. And so
Yep.
what you're seeing here is looks like China is the orange. The light blue is Europe, and then the green is United States, and then there's the rest of the world.
Yeah.
Okay, and the top markets for sales of cars is China, Europe, U.S., and then Japan. Okay,
Yep.
so
Mhm.
yeah, this is what we're seeing here. I mean,
Yeah,
yeah,
and
and so
in this one they're predicting 35% increase in 2023, which is probably light. I think it's probably going to be closer to a 50% increase in 2023. But even that would get us to 13.5% in 2023. I'm thinking it's probably going to be, closer to 15% worldwide sales of all um, electric cars in 2023.
yeah. Right. I mean, that's do you want to make any more comments about an S curve? Do people
Well, okay,
It seems to be something that people don't they I can't it's a very simple concept, but many people just don't, even though they hear it and they see it, they don't
yeah,
they don't internalize it. They don't expect it. They still think they want to straight line things as much as I can, even though they know that S curves have action has happened all the time with any new technology adoption. You remember that one table that shows here's the S curve for dishwashers,
yeah,
microwaves, cell
right.
phones. Every
right.
new tech, you can see this, and then it's going faster and faster and faster, and yet people still kind of want to straight line things. So tell me what your,
Yes.
what the
So
psychology
so
is
I've
there.
I've tried to explain it two different ways because I know again people are math challenged. The vast majority of people hate doing math. And then algebra is another level over that they don't want to do. So, and when you get into S curves, now you're past algebra. So, you know, the so the mind thinks in terms of straight lines. It's hard to think in terms of these exponential numbers. But one way to look at it is it 50% increase per year, which seems likely based on production. Now, that does not mean sales, but the companies that are manufacturing these cars, like Hyundai Kia, like Volkswagen, like Stellantis, and you've got hundreds of these companies that are making the BEV cars. When you put them all together, they're going to be increasing production by 50% per year. If there's enough people to buy, if people will buy that production, then your overall sales are going to increase by 50% a year. So that would go from 15% in 23 to 22.5% in 24 to 30, to almost 40% in 25 to 60% in 26 to 90% in 27, just by increasing 50% a year. And that's how exponentiality works. The other way I tried to show it in a couple of videos was by taking all the different companies that are serious, the major, I think I did the top 16 or 20, in terms of their expectation. How many cars do they think they'll be making in 2026? And you can get to 65 million. If you do that math and you just say General Motors says 2 million by 2026, Ford says 2 million by 2026, Stellantis says 1.5. Just take all of their own statements about where they believe they'll be in 2026 and you can get to 65 million. That's another way to do it.
Yeah. Yeah. So the adoption of the S curve is interesting, and like you said, the 50% growth. But then why is there so many people still stuck on demand? Is there demand? Is there demand? And we're all following just a tiny little drops in the rise in inventory. I mean, these things will happen on a quarterly, weekly basis. They will happen based on pockets of locations, different dynamics. But at the end of the day, if you zoom out, and while you might have little dips here and there, at the end of the day, it's a skyrocketing growth. I mean, that's just the only way to look at it, right? But so many people are just trying to scare everybody, going, "Oh my God, there's no demand." Why
Well,
did
okay.
Tesla reduce prices?
So if I'm a car dealer, I don't want this to happen. If I work for a car dealer, I don't want this to happen. If I work for an oil company or a gas station, I don't want this to happen. If I if I work for a anybody that's involved in those industries, I don't want this to happen. My neighbor who works in that industry, I don't want it to happen to him. So there's a whole bunch of resistance in terms of industries that are just going to collapse as a
Yeah.
result of this. There's also a mindset that says that's crazy. How could that possibly happen? How could it possibly grow that fast? I've seen, even though you've seen it before, so you have this mindset that doesn't make sense. So unless you watch, I always tell people start by watching the Tony Seba video, or
Hmm.
tell your friend who doubts it to watch the Tony Seba video. If you do that, you'll get some idea of how many times this has happened before. He starts with the horse and buggy
Yeah.
in the turn of the last century. So it happened in 13 years from
Right.
80% horses to 90% cars in 13 years. I mean, that's pretty amazing,
Yeah.
including the beginning of the build out of an international transportation system by putting roads across the country. I mean, all that happened in 13 years.
Yeah, and then when you look at that table of all the different disruptive technologies, is that they get faster and faster and faster. And the reason they get faster is because once your tech is adopted fast, but the other thing people forget is the incumbent technology declines very fast. Who wants to buy the old tech?
Yeah.
And in the past, it used to take a while for information to spread, but now, it's very fast for people to understand right now that you don't want to be buying a nice car at this point. I mean, so
Here's the
several months ago, some family members would be like saying, no, I'm going to stay in my nice car. Okay. But today, I don't know anybody who's thinking that I'm still going to buy an ICE car at this point. I think they know, oh, I better look at the electric vehicles because they've heard it everywhere. It's all social media. It's everywhere now. Although, yes, don't tell me I
So,
know. Yes, we need to do more education. I get that.
well, okay. So here's another problem. People hate to think about the future. They really
Yeah,
do. It's
yeah,
really hard to get people to think about the future. They're afraid of the future. They're worried about how it'll impact them. So even the Tesla community gets afraid to think about the future because everybody in the Tesla community wants robotaxis, but nobody wants to contemplate what the actual effect of the disruption is going to be.
yeah,
A couple of people are starting to talk about, okay, how many cars do you need in 2030 to be manufactured if you've got robotaxis? Well, they're going to be 5 times as efficient. So does that mean we only need 80%, I mean, sorry, 20% as many cars to be made in 2030 as we do now? Well, there's a replacement issue. So it won't be like that. It won't be in 2030, but somewhere between 2027 and 2040, the robotaxi thing will start to completely disrupt the
mm,
automobile manufacturing business, and you won't need as many cars. And so that's going to be true for Tesla too. So you have to, and with the disruption of robotaxi, you're not going to need Tesla insurance. So
right.
there's things that we're going to eat our own kids as we do this, and people don't want to think about that because they want to see 20 million cars at full margins in 2030, but it may be 15 because maybe that's all the robotaxis that are necessary in 2030. But anyway, that's just me beating the drum again for you gotta really think about these numbers a few layers out. You can't just think about what's going to happen next year. You got to
Yeah.
look out to the future.
Yeah, the problem with S curves is that it's so slow, and so then you just can't believe that it's going to jump up because it's been so slow. And so every time you think it's going to jump up, it doesn't, and then you're going, see, it's not. It's going to take a long time. Um, Okay, so I've got some more really nice charts here. So I want to cover this. This is from ARK Invest, and they show they compared all the cars, many cars with each other to see the how the electric vehicles compete with each other, all electric vehicles. And then on the x-axis, it's drivetrain performance. The higher, the better performance, the better the car is. And then the left axis is price. So I'm going to zoom in here, see if I can do that. Okay. You can see that the ones that are really here, the purple, it's the Hyundai Ioniq 6 and the Ioniq 5. Then you got the Tesla Model S up here, the Model 3, and the Model Y. The Model 3 and Model Y. These are the leaders. Then you got the Mercedes, very expensive, but good performance. And then you got the VW ID4, and then everybody else, the BYDs, way at the bottom left. Okay, they're not not really high performance, and they're priced low. Okay, this is good, and you can see where others fall into. So they go, "Oh, the Mustang Mach-E is a good competitor to the Model Ys." Well, they're not. They're priced higher, and they've got lower performance. Okay, you can see the Porsche is very expensive. So you want to pay for it, you can certainly do that, but it's way up here on its own, right?
Mhm, mhm.
And so, what's really interesting is just you can see things, in location where they're at. Um, yeah, and the question that ARK Invest had was, sure does look like the Hyundai's are doing well, but the question is, are they making profits on it? Because they lowered the price, they can be competitive, and they went, as good of a higher performance, but can they do the same efficiency that and the cost savings that model that Tesla is able to do?
I don't pretend to be an expert on any of these other car companies by any stretch of the imagination, but I probably know more about them than most
Hmm.
people in the world, much
Hmm.
less the community, because I have gone in and I've studied them one by one. I watch every single video that Lars does. Lars Strandritter, who is also one of the contributors to the Elon Musk mission and has his own YouTube channel, um, and also the Electric Viking. They're the two that do most of the in-depth looks at the other car makers and the other car brands. And I've done a lot of videos on this on my channel. I think one of the winners is going to be Hyundai Kia. I think they're a real good maker. I think they're smart. I think they get it. and I think they're going to be. I think they're going to be one of the winners in this overall game. But BYD and Tesla, of course, will be way out ahead of them. But they could be a very strong third, and it might be, believe it or not, Stellantis. Might nobody pays any attention to Stellantis because of their stupid name. Who
Yeah,
even knows what a Stellantis
I
is,
know.
right? but they are looking very strong. Their margins, their profits, their attitude about BEVs, their capabilities in terms of their strengths in manufacturing. So be careful. Stellantis might be the number four player when all this plays out.
Yeah, I interviewed Corey Steuben of Monroe and Associates just this weekend. Released that video, and he said exactly what you're saying. They tore down the cars, and he thinks that the next to Tesla is Hyundai, uh, and the Kia and Hyundai are cousins in the
Yep.
Korean, and then from there it's like a long fall for the European car makers and others. Okay. Um, yeah, so that's a really nice chart. I like somebody finally did that. And then finally we've got this, which is, just like what we're saying, right? That this article, there's a think tank that did a very kind of a, I think it's well regarded kind of analysis of comparing all the different electric vehicle companies with each other. And they say that Tesla and BYD lead the world on electric vehicles by a country mile as Japan car makers drag the chain. So if you take a look at let me set it up a bit. So there's a report called the Global Automaker Rating on 2022. It's just released by the U.S.-based International Council on Clean Transportation, and they ranked the world's top 20 vehicle manufacturers on their transition to electric vehicles. And they looked at market share, technology, and strategic vision to create these rankings. And the rankings show that Tesla and BYD are right on top of that. And so here's the table, and you can see that Tesla and BYD is in the green. They were given these rankings based on market dominance, technology performance, strategic vision. I don't know if these are the right things, and I don't know how they did it, but this is a ranking. And the leaders are Tesla and BYD. And this is, it's interesting, if they use this, whatever category they use at, it's interesting to see if they applied it fairly. But you can see that BMW is at 56 versus, so it's a huge drop between the leaders to these
Yes.
transitioners. And so you got the BMWs, the Volkswagens, Stellantis at the top. You and I were just saying that Hyundai is really good, but they're down below here because even though they've got low market dominance, right? Even though they have a good technology performance, and they don't believe they have good strategic vision. I don't know what that means, but they give a really low mark for that, and that's why they fell lower. But their cars are built well, and but they don't, like we showed in an earlier table, they don't sell a lot. A lot of these guys don't sell a lot of these at all. And then the laggards, though, is Toyota, Honda, Nissan, um, Tata, Mazda, Suzuki. All the Japanese ones are really down here. They don't have any strategic vision. They're caught left-footed, I guess, and they're laggards. So I kind of think that this is right. I mean, what's your analysis of this?
Yeah. Yeah. Again, I think that VW has a chance to be one of the major players. I think BMW has no chance to be a major player. They will probably be a strong niche player, but maybe not
Niche,
even
yeah,
that.
yeah.
But they will not be. They are not going to be making 8 million cars a year or 7 million cars a year.
Hmm.
That's not even in their bloodline. Whereas VW, Stellantis, and Geely all have the capability. They all have the factory capacity. I forgot to mention Geely too.
Hmm.
They're a strong one. They're another one with a stupid name that nobody can pronounce right. I don't know if it's Geely or Geely, and sometimes I put an R in there for some reason. So, but anyway, nobody knows who Geely is. Nobody knows who Stellantis is. But Geely, they have a lot of good brands. They are making one of the best Chinese uh, brands in Europe. We were talking about Europe earlier. The MG is a strong brand in Europe. And maybe the number one Chinese BEV in Europe right now, and people love that MG. And that's just one of their multiple brands. Plus, Geely and BYD have a lot of factories like in smaller countries around the world. So these other regions need to be addressed. You've got Africa, you've got South America, you've got the Philippines, you've got Southeast Asian countries. These are smaller markets that have really inexpensive vehicles and don't have very many sales. But these companies have a presence in a lot of these countries with factories and can easily move in and start making electric cars in their current footprint or by expanding their footprint. So I think that's why you really have to pay a lot of attention to Stellantis, Geely, and BYD. They all three have
Mm.
these capabilities.
Nice, nice ad. Here's one thing I don't consider to be accurate, but they rank Ford lower than GM. Um,
I
I mean,
agree with
and I don't get why. I mean, they have higher market share, so they give them a little bit better than Ford. That I get. But look at the strategic vision. Somehow Ford is lower than GM. So I don't understand. But okay,
Yeah,
that's their ranking.
yeah. I think Ford is the winner when it comes to the looks of the car. Um, I don't know. I haven't really taken a deep dive. On Ford. I was never I've only owned a couple of Fords in my life, so I've never really been a big Ford guy. But there's something wrong at Ford. These two cars that look good and get some high ratings, and people speak well of them. The Lightning and the Mustang.
Maki.
They're not selling. They're just not selling. Their numbers are down compared to what they were. So I don't know there's a problem there. I don't know what it is. Maybe I should study it more. I'll get back to you.
Yeah, yeah. Okay, let's take a look at this tweet, which I liked, which is this guy named Pete Petrovsky said this, right? His prediction that if you look at the mobile phone, the internet browser, the operating system markets, in basically in those markets, it boiled down to just 1 to 2 dominant players. It consolidated. And he's predicting that in 10 years, the vast majority of the global car market will consolidate it down to 1 or 2 dominant players. And what I like about it is that it's a reminder that today it's an auto hardware business, but really it's a software business. And it's similar to mobile phones, internet browsers, operating system. These are all software. And there's going to be one big company. It's going to be Tesla's like an Apple, and maybe the BYD is going to be like the Androids, and a bunch of Android companies combined together. And it's going to be partnerships and networks. And so you already saw Tesla partnering with Ford and the supercharger. They'll partner. The other tweet I want to show here is that Elon sent this out this morning saying that Tesla aspires to be as helpful as possible to other car companies. We made all our patents freely available several years ago. Now we're enabling other companies to use their supercharger network. And then he says, are happy to license Autopilot and FSD and other technologies. I mean, yes, he's been saying this for a long time, but I think that there's a reason why he's been repeating it, which is basically these car companies are backs against the wall. They know they need to make a decision now, despite their egos. They need to do it, and so they're going to basically partner with Tesla, and then eventually there's going to be consolidation, right? Like superchargers one, then there's going to be the software, then it's going to be the Tesla inside. It's going to be like, that's going to be the one big brand. And then there's going to be all the BYDs because they've got the volume. They're going to have sheer volume. But it's going to be like Android, where they're not going to be better than the premium brand. They're not going to have the same margins. It's going to be basically the Apple Android scenario all the time, where Apple only has 15% of the market share, by the way, which goes back to the beginning of our conversation. It doesn't matter if Tesla has 20% of the market share. It doesn't matter if it falls from 20 to 15% because all of these Android companies, skyrocketed and they sell little cheap things that are terrible. What matters is that they have 80% of the margins. The rest of the companies, they don't have margins. If you don't have margins over time, this, the market share of what's happening to Apple. Apple's market share is rising up. People are switching because they're just going to end up to be better products. So, yeah, what's your thoughts on
Yeah,
that?
yeah. And then you, if you're good, if you're any good, you continue to innovate. You continue to do things that are special. You're still hiring all the
Mm.
best engineers in the country, et cetera, et cetera. And I don't know if you watched it this morning, but the Apple reveal on their new mixed media headset. I mean, $3,500. My wife is like, no, we're getting two of those as soon as they come out. So
Yeah,
it's
yeah.
like, you you have the bucks and you have the people. Man, you can really make something happen.
Mhm. All right, let's talk. And last topic here. Let's talk about Q2. What's your estimates for Q2 volume of sales that Tesla will have, both deliveries and production? And then, yeah, just tell me anything more about anytime you tell me that you think the Tesla stock is on an inflection point and it's going to start growing again.
Well, here's where the inflection point might happen, okay?
Mm.
Because you've got the street right now at 440. That's their number. 440 hasn't really budged. They're sitting at 440. You got Troy Tesla sitting at 437. That might I'm hoping I'm not violating something. That might be something that's hidden right now. I don't know, but I think he's
No,
still
no,
at
he
437.
tweeted it out.
Okay, 437. And then you've got Stevenson. He's up at 505. Okay.
Yeah, Troy
So,
actually raised it to 439. And he always
okay,
does this. He always starts really
right,
low at the first quarter, and then
right,
everybody's freaking out. But what he does is he just continues to raise it as we get
right.
closer to the end of the quarter. And James Stevenson is at 510,000 cars for the quarter. Yeah.
505,000
Okay.
shipments.
Okay.
So to me, the 505,000 is a much better number. Although I'm still, believe it or not, I'm under him. I'm at
Mhm.
490. I've been at 490 forever. I still think it'll be 490, even with what we know right now. Hey, it could be 505, and maybe I'll be way off, and it'll be 460. Believe me, if we hit 460, that is going to move the market. Okay, because the street's at 440.
Yeah.
If we hit 470 or 480 or 490 or 500, I mean, holy mackerel, who knows what might happen to the share price? Because when those numbers are hit, it's not just talking about this quarter. That all of a sudden affects year-end totals. That affects 2024 totals. It affects everything from here on out. So the entire that is shift an entire mood with regard to Tesla's future with as far as the sexy cars are concerned. So anyway, um, I don't know how they could be that far apart. These two guys really spend a lot of time. They really go into the nitty gritty details and look at ships at sea and trains on the track and all this kind of stuff. I would never be able to. I couldn't stand to go through that kind of detail. But they do the job, and yet they've come out with this massive difference. And we're only a month away from knowing the numbers. So it's like, how can they be so far apart?
For me, it's like volume wise, they're going to hit way over 460 because they're going to sell every car they make, and they play around with the pricing, which is something they were able to do better this quarter than they were last quarters, where they're
Right.
willing to cut the prices whenever they need to, raise it a little bit if they need to, and so their goal is to sell every car. Now the question is, and so I have no qualms about them hitting these high numbers because we now know that both Berlin and Texas are now at the 5,000 per week mark. We know that they're growing significantly and they're on path. The part that I don't know is the margins, right? And so the PE ratio. And so that part is, whether or not the street will start looking favorably at Tesla because of the target of 1.8 to 2 million. That's one thing, growth. But the other part is the margin compression. If it's a lot lower than what they used to estimate, then the stock, they may not give it a higher PE at that point, right? It's already at the high compared to that earnings estimate for next year. If there's any earnings surprise, then we're back to the races. If it's not at 18% and it's at 20% or even higher, we're back to the races. And the question is, we were all thinking why would the market was surprised in the first quarters. We were all thinking that all these cost savings were going to show up in Q1. They didn't show up in Q1, and so the margin went down to 18% from 20, and so everybody got freaked out and this hurt the stock. But maybe this is the quarter. Like we're all sitting here going, "Oh, it's done." Well, no, all the Q1 savings we were thinking, the scaling of the factories, you know, um, just the things that they've been doing to do this. So, okay,
Well, okay, but now James Stevenson is at 21 and a half. That's what
okay,
his number is. He's at
nice,
21 and a half.
yeah,
I think 21 and a half is probably right on. I think
yeah,
that's a good number.
Yeah.
But the main reason I think it's a good number, and the main reason I think we'll see the skew, is because all of the car increase from 440 last month to 500. I'm sorry, from 440 last quarter to 500 this quarter is all going to be Model Ys,
Yes.
and they have much higher margins, and they have a higher average cost of sale. So I think that the one, forget it. Yes, I think we'll gain something on commodities. I think we'll gain something on battery costs. I think we'll gain something on ramp. I think we'll gain across the board. We'll have lots and lots of gains. But the biggest thing, which is easy to figure out, is
Mhm.
you got, I don't know, 60,000 more Model Ys in the mix. That's a big deal.
Yep. I think anything over 20% is going to be good. So we're going to hear the volume numbers, production and delivery in basically a month from now. This is already June. So right around this time, 1 month from now, we're going to hear it. And then another 20 days after that before we'll hear the actual margin.
Right.
I
Margins.
think it's looking good. Cross fingers. I think we're great. Thank you so much, Randy. Appreciate you. Please follow him on YouTube. He's got a YouTube channel. He pumps out 2 videos a day. He's got incredible analysis of and thinking, strategic thinking of things, and he's on Twitter as well. So Randy W Kirk 1, find him on both Twitter and YouTube. Thanks, Randy. See you soon. Bye, everybody.
See you. Bye.